The breakout had already started. The volume had already surged, and most traders were still convinced XRP was weak. I remember staring at the chart that night because something about the price action didn't make sense. All week, the market had looked fragile. Red candles stacking slowly, momentum fading. Every small rally getting pushed back down almost immediately. If you listened to the general sentiment, the story sounded simple. XRP was losing strength again. Analysts repeated the same cautious tone across financial media. Traders on forums talked about fading momentum. Many short-term investors had already started exiting their positions, convinced the market would drift even lower before anything meaningful happened, and for most of the week the chart supported that belief. Lower highs, weak rebounds, liquidity thinning every time the price attempted to move higher. It looked like a market slowly running out of energy, but markets have a strange habit of changing direction when the narrative feels the most certain. Late that evening, something subtle began to appear in the order books. At first, it was easy to ignore, small bursts of buying pressure that quickly disappeared, nothing dramatic enough to trigger alarms, just activity. Then the volume started building, not retail volume, not the frantic kind you see when social media suddenly explodes with excitement. This was different, slower, larger blocks appearing quietly beneath the market price. Someone was absorbing the selling, and they were doing it with patience. For a moment, the chart still looked weak on the surface. Sellers continued hitting the market, convinced they were escaping before another drop. But something unusual was happening behind the scenes. Every wave of selling was getting absorbed faster. Liquidity was returning. The price stopped falling. And then, almost without warning, the structure of the chart began to change. Green candles appeared where red ones had dominated all week. The order books flipped from defensive to aggressive. Buyers stopped waiting below the market and began stepping in directly. The breakout that traders had stopped expecting suddenly arrived. But by the time most people noticed the move, the largest buyers were already positioned. That's what caught my attention. Because when I started tracing the on-chain data behind that sudden surge in buying pressure, the pattern became impossible to ignore. Several large XRP wallets had activated within the same narrow window of time. Whale wallets, dormant for months, and they had begun accumulating hours before the breakout appeared on the chart, which raised a question that most traders weren't asking. Was the breakout really sudden, or had the whales been quietly preparing it all week? At the start of the week, XRP looked tired, not collapsing, not crashing, just slowly losing momentum. Each day, the chart told the same story. Small rallies appeared during the early trading hours, only to fade by the end of the session. Sellers seemed to appear exactly when buyers needed momentum the most. For retail traders watching from the outside, the pattern felt familiar. A market that couldn't quite break upward. Financial markets often behave this way during transitional phases. Momentum disappears, but the final direction hasn't revealed itself yet. Prices move sideways or slightly downward while traders debate what comes next. But sentiment was clearly shifting. Many short-term investors began interpreting the weakness as confirmation that XRP simply lacked the strength to rally. The broader crypto market had experienced stronger movements elsewhere, and capital was beginning to drift toward those assets. Liquidity was thinning. The order books across several major exchanges reflected that shift. Bid depth beneath XRP's price slowly declined. When sellers pushed downward, fewer buyers were waiting to absorb the pressure. At least, that's what the surface data suggested. Because beneath the visible orders, something more subtle was beginning to happen. Small but consistent purchases started appearing during every dip. They didn't push the price dramatically higher. Instead, they quietly slowed the pace of the decline. Each time sellers pushed the market downward, the fall became slightly shorter, then slightly weaker. Eventually, something interesting happened. The market stopped falling as easily as before. This kind of behavior often signals an important transition. When downward momentum weakens despite continued selling pressure, it usually means someone is absorbing supply. Large buyers rarely appear all at once. They accumulate gradually. And by the middle of that week, the chart suggested someone was doing exactly that, but the narrative surrounding XRP hadn't changed yet. To most observers, the asset still looked weak, and in financial markets, that's often the moment when the real accumulation begins. Because the best opportunities for large investors appear when confidence disappears, and by the time most traders stopped believing in the possibility of a breakout, someone behind the scenes had already started preparing for one. The chart alone rarely tells the full story. Price movements reveal what happened, but they rarely explain who caused it. In cryptocurrency markets, that second layer of information often appears directly on the blockchain. Every large transfer leaves a trace. So when the sudden breakout began forming later that week, I started examining the on-chain data from the previous days. That's where the first major clue appeared. Several large XRP wallets had become active again. These weren't ordinary addresses. They held tens of millions of tokens and had histories connected to large liquidity movements across exchanges. In other words, these were wallets capable of influencing market conditions. Even more interesting was their recent behavior. Many of these addresses had remained dormant for months. No significant transfers, no liquidity movements, nothing that suggested active trading. Then, within a short window during that quiet week of declining sentiment, they woke up. One by one. The transactions were large but carefully structured. Instead of sending XRP directly into exchanges for selling, the wallets began moving tokens into intermediary addresses connected to trading infrastructure, liquidity pools, exchange settlement wallets, market-making channels. This pattern suggested something very specific: preparation. Large market participants often reposition their assets before initiating significant trades. They ensure that liquidity exists across multiple platforms so their activity doesn't create extreme price swings, and that's exactly what the data showed. XRP wasn't being dumped into the market. It was being distributed strategically across the trading ecosystem. That discovery changed the entire interpretation of the week's price action. What had looked like a weak market losing momentum might actually have been something else entirely: a quiet redistribution phase, retail traders selling out of frustration, whales stepping in to absorb supply, and by the time the final wave of selling pressure ended, those whale wallets were already holding significantly larger positions, which meant the breakout that eventually shocked the market might not have been spontaneous at all. It might have been the final stage of a plan that had been quietly unfolding all week.